Hey folks, Dan Frio here with your opening bell for April 21st, 2025. If you're watching this video, you're most likely building a house, buying a house, or looking to refinance. So my goal here is to help you guys figure out what's going on with these things and also understanding all the mortgage programs that might be out there that you might not even understand. My name is Dan Frio. I do these videos twice a day to help you guys understand all this. And our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? I'm going to give you all that information at the end of this video. Pretty intriguing because one gentleman said to me this over the weekend. He said, Dan, you have to help people understand how locking in a rate works, because if they lock in at a bank, they're stuck. If they lock in with you, they're not. So I'm going to share that experience with you guys, our conversation with that young man briefly at the end of this video, so you can understand what the heck I'm talking about. So without further ado, let's get to today's news. Mortgage rates went up a little bit last week or on Friday, but for the week in a whole, they were down, and they were down quite a bit. So what's going to happen this week? Well, so far, it doesn't look so good. Basically, the indices across the board are down almost 2%. We have the VIX spiking right over my head. That means the anxiety level on Wall Street is out the roof. And then you have mortgage bonds that actually tanked this morning too, and they're recovering, but they took a big bash right through here and they're recovering. So we're trying to figure out the whys behind all of this. So let's get to it. In today's news, or in today's economic calendar, there's really nothing. If you go down through it, today we had U.S. leading indexes. Didn't do anything to the markets. You had on Tuesday the FOMC Harker speaking, and that's just a person that sits on the Federal Reserve. That might skew the market, but probably not. You have a 2-year auction. Oh, the only person interested in that's probably going to be me. And then you have on Wednesday nothing there as well. So then Thursday's when you start getting some news out. This is the unemployment numbers and initial jobless claims. That's really the only thing coming in this week that should be upsetting the apple cart. So why is this happening? The Dow Jones is down 700 points. Well, if you go over to the mainstream, media, let's just say we go to Yahoo Finance. This is going to explain everything to you. Okay, so we don't have any economic news coming in. So what's stirring the pot? Well, you go down through here. Stocks sink with Trump's tariffs and Powell bashing. Okay. Can Trump fire Powell? He can't fire Powell, folks. He can't fire him. It's an independent position. This is a lot of smoke and mirrors, but he'll hold out his position, or will he resign? Probably not. But this is a lot of smoke and mirrors in a lot of cases. You go down through here, NVIDIA investors balk at beating down valuations as risks mount. So NVIDIA is getting hammered. Then you got to get another thing. Who will replace Powell? Down through here, China vows payback for nations siding with U.S. on trade. Amazon downgraded. Capital One. So you have all this, nothing really involving, anything but tariffs. Tariffs, China. You don't hear anything on here about Russia, Ukraine, Gaza, anything else. No earnings reports in any of this. So it's just, I hate to say it's like fear mongering. So if you saw this data every day, all day, you'd be like, oh my good. Let's look just briefly at some of the data that came out in the last couple of weeks. Maybe I am a person that looks at the glass half full, but maybe that's what got me in this position in life. Okay, so let's look at the data that we had. So here as an investor, here's what I look at. Or is a Fed. Let's go to the Fed. Here's what the Fed watches. Let's go to the Fed Watch tool. Okay, the Fed watches things like this. No, that's what the Federal Reserve is going to do at the next meeting. Where's my Fed Watch tool? Fed Reserve, here's what they watch. Okay, so the Federal Reserve controls this number right through here. So if you're new to the channel, you might not have known that. Okay, here's what they look at though. And let's look at the same data. They look at inflation. They look at the PCE. Well, we're going to look at that and a couple other things. Unemployment rate, 4.2. We'll look at that briefly. And then the GDP. Okay, so what's been happening is they want the Federal Reserve should lower rates. That's what President Trump keeps saying. He said, this is too high. Well, we have inflation right now. Let's say inflation's on the high end, 3.32. We have the federal funds rate at 4.2. Means it's still 100% escalated. But with the Federal Reserve's coming in, they're saying, we don't know what tariffs are going to do. So we're just going to sit on our hands right now and wait for some things to subside. Well, over the last couple weeks, we had inflation. We had the PCE actually coming in lower than expected. If you look at that, the previous number was higher than that. You had the CPI, which is consumer inflation, coming in 2 weeks ago, and producer inflation coming in 2 weeks ago, much lower than previous, and even lower than expected. So you have inflation coming down more than expected. You have the unemployment rate that is basically just holding steady. We have employment numbers. The last reading was over 250,000 people, and we're waiting for the next GDP report to come in, but it's still going to be positive. So if I look at all this data, then I look at wage growth, and the savings rates and all this other stuff, I'm saying, okay, the economy doesn't look so bad. We don't have to crash as an economy, and we don't have to, completely flourish. Maybe we can just be, slow and steady. Okay, so that's what I'm looking at in the rearview mirror right now of what I'm seeing, and that's how I'm investing. But a lot of people are getting out of 10-year treasuries right through here. The 10-year treasury raises as investors weigh Trump's criticism of Trump. So the markets are right now, they're skittish about stocks, and they're skittish about bonds. So what are they doing with their money? Well, they're not putting in just cash, so they're putting it in precious metals. So what we try to follow too is where the money's moving, because normally if you see the stock market really getting hammered, so you go over to here and you see the stock market down 700-800 points, usually you'll see a pickup in here. Maybe that's what's happening. We had basically the Treasury right through here, the mortgage bond this morning opened and it just crashed. So when you see this, the price, I'll explain to you what's going on with the interest rates by this bond right through here. So we know the market's crashed here. The Dow Jones is down 700 points. That tells us everything here. Through here, we have to figure out, is this good or bad for interest rates? Well, all you need to know if you're new to the channel is when prices of bonds in general go up, prices of a bond goes up, yields come down. Okay, so this morning we had a huge jump in mortgage rates. Okay, because this is a mortgage bond. Well, it's been recovering ever since. So again, another example about that young man saying, well, the good news about Dan is if you lock in with another bank. Here, let me explain to what I was talking about. Let's get over to what I do for a living, and then we'll come back and tie in some of these things together. My name is Dan Frio. I actually am a mortgage loan officer. The cool thing is I work at a federal bank, so I'm licensed in all 50 states as well as Puerto Rico. Here's the cool thing about us. The reason why I'm here is we're set up now. When I joined the bank, we had about 29 lenders. We now have 33 or 34 lenders, and I'm helping facilitate this, and that's the reason why I joined. Here's why people choose us. Your goal is this. Why are you watching this program? Well, it's the rate update, how to watch rates, how to figure out what's going on with interest rates. Let's say, for example, you choose another bank. Let's say you were choosing me and another bank. Well, and then the other bank came back and they won by some fees. Then you locked in. Well, let's say this happens, okay, right through here. Let's go back just about 5-6 days ago. Again, when the price of a bond goes up, rates are coming down. So let's just say you lock down here, okay? And then rates went down, let's say 0.5%. Well, you call back your bank and you're like, okay, the rates just plummeted. I want to relock at that lower rate. They're going to say, too bad. Or, okay, well, it's going to cost you $5,000. Well, if you locked with me and this happened, what I would do is, this is where that 33 lenders come into play. I can call the lender that we're locked in at and say, rates dropped to 0.5%. Can we negotiate this? Can I use some credits or, works a deal out with you? And if not, what I can do is withdraw your application and lock you in at one of the other banks. That's one of the biggest reasons why I do what I do. Yes, it gives me availability of a lot of different programs I don't have, but one of the best things it offers me is competitiveness in an environment that's like this. So this is today's chart. Look at where we opened today. If you lock down here, you might have missed out on maybe a 0.1 in rates. So these are just training tools that I'm here to help you guys navigate through. So that's it for today, folks. If you want to check out me and a little bit more about me, because I do these videos twice a day, is visit me at therateupdate.com. You can find a whole bunch of information on this website. You can actually put in your application right over my head. You can actually schedule a consultation right through here. Give us a call. You're going to scooch right in the front of the line. Or if you want to reach me, just shoot me an email. My email is dan@therateupdate.com. Now, this weekend, I kind of read through some of the comments down below, and I realized why I don't reply to a lot of them down below. People are just rude. Okay, so if you really need my assistance, shoot me an email. If you put a comment down there, most likely I'm not going to respond. I'm just letting you know. So if you really need me, send me an email. Give us a phone call, schedule a consultation, or put in your application. I'd love to help you. But that now you realize why I say, and our slogan is, one application, one credit pool. We're going to shop your loan to over 30 different lenders. That's how it works. So my goals for right now, midterm, short term, and long term are this. Midterm, rates are going to stabilize right about 6.75-ish. And that's where we're going to stay for a little bit, until the markets settle a little bit more. Right now, short term, it's going to be all over the map. You could see days where it might change by 0.25%. And I'm not kidding you because it happened last week. Okay, so that's why that's what's happening there. Long term, by the end of the year, my predictions are rates are going to be about 6.5 to 6.75. If it's a really good market, you might be at 6.25 to 6.5. So I know it's a big spread, but that's the best I can do with the news that we have in today's markets. So thanks for watching, folks. If you want to find out, like I said, more about me and my team, just visit us at therateupdate.com or send me an email at dan@therateupdate.com. Thanks for watching, folks. See you at the closing bell. Hope you learned something today. And all I ask you to do is one thing, like usual. Please subscribe down below. I'm trying to hit 50,000 subscribers by the end of the year. You're the only person who can help me get there. Thanks for watching. Take care. Bye-bye.